أعوذ بالله الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. So today we shall continue with our second lesson that is in our course, which is business accounting. In our lesson last week, we were talking about what? Introduction to business. Remember, it is what? The name of the course is business accounting. So last week we were talking about the first part. We were talking about the business part. What is business? The objective of business, the types of business. We talked about the sole proprietorship. We talked about the partnership, the corporation, the advantages, disadvantages, and so on and so forth. So today we shall go to the second part, which is accounting. So we are going to combine these two things. We have the business, we have the accounting. So we need to know today what accounting is. So in our lesson today, number one, we shall be talking about what? The meaning or the definition and the purpose of accounting. Number two, the importance and role of accounting in business and business strategy. Then number three, we shall be looking into some key accounting terminologies. So these are the words that we shall be using from tomorrow. So you have to familiarize yourself with those accounting terminologies or accounting words. Then number three, or lastly, we shall also cover an overview of financial and managerial accounting. So these are our four objectives of our lesson today. So Bismillah, let us start. So number one is Ta'rif al-Muhasaba. Like when you are talking of accounting, what comes to your mind? So when you are talking about accounting, there are three things that normally you need to have some information or idea about. So number one, accounting is a systematic process. And this systematic process involves the organized collection and recording of financial transaction. So it's an organized collection. We organize some data, we collect, and we record financial transactions. So when you're talking about financial transactions, we are talking, for example, buying is a financial transaction. Selling is a financial transaction. You go to a bank and you take a loan, then that is a financial transaction. Number two, measuring financial information, al-qiyas. Accounting translates business activities into quantitative financial data. Remember, when you're talking about, we have two types of information, qualitative and quantitative. So accounting helps us to quantify, to measure our transactions. Then lastly, communicating financial information. This data, the quantitative data, is shared with users such as management, investors, creditors, and regulatory agencies. So once we have compiled all the financial information or the financial data, number one, we need to share it with the management of the company. Why? Somebody can ask Limada, because the management of the company, they are going to use the financial data to make decisions, informed decision. They cannot make any decision unless they have that information. They have to know, as a company, are we doing well? Are we having a loss? Are we getting a profit? How are our expenses? So this data, we give it to the management. The accountant will go to the office of the manager and give the manager this information. So that is known as communication. Investors, people who want to invest. For example, today, if I want to invest in the Habshil Bank, the first thing I will ask, I need your financial statement. I need to know how you are doing as Dahabshil. Because if Dahabshil is not doing well, I'm not going to put my money there. If Somtel is not doing well, so I have to ask for the financial data if I want to invest. So investors, they always ask for the financial data. Creditors, the bank, for example, Premier Bank, if you want, for example, today, if you want to take a loan from Premier Bank, when you go there, they will ask you, give us your financial statement. Because Premier Bank, they want to know, will you be able to pay back their money? So that is why before they give you the loan, they will ask you, they want to know your financial strength and your financial health. Then regulatory agencies, the government, they'll always ask you for these financial statements. Why? Because there is the element of tax. So businesses are normally taxed by the government when they make profit. So the government will always come at the end of the month. Sometimes at the end of the year, they ask you, we need your financial statement. So they need to know your profits, because you normally pay you normally pay taxes based on the profits. So in essence, accounting is the language of business that enables organizations to communicate their financial health and performance to various stakeholders. So accounting is the language of business. So business normally use the accounting and the financial statement to communicate about their financial health. That is about their solvency status, about their liquidity and performance. And they normally use it to communicate about their performance, how good they're doing. Now, what is the purpose of accounting? So number one, so they're telling us the purpose of accounting can be broken down into several key functions. Number one, recording financial transactions. So every business engages in numerous financial transactions on a daily basis. So for example, if you're having a business center or a shop, you normally sell, you normally buy, you normally pay your workers ila ghairi dhalik. All these are transactions that needs to be recorded in a book on a daily basis. So if it is a big company, they have an accountant. If it is your small business, you are the one who should be doing what? Who should be recording those transactions. Number two, classifying financial data. So after recording transactions, accounting organizes and classifies this data into categories. So we have the revenues, al-iradat, we have the masarif, and we have the usul, and we have the khusum, ila ghayri dhalik. So the data is classified. And what is the importance of this classification? So this classification helps provide clarity, al-wuduh, and simplifies analysis. So you can just know that in this file, we have revenues. So you can easily analyze the revenues because it is in a class, in a category A. In category B, maybe you have your assets. So it becomes very easy to analyze. Number three, summarizing financial information. So accounting produces summaries. These summaries are known as financial statement. And this is what we shall be covering from next week. This financial statement showing the results of transaction over a specific time period. And this statement, number one, we have the income statement. So the income statement it helps us to know more about our revenues, our income statement, how good are we doing. So it will always have the what? It will always have the revenues and the expenses. Then we have the balance sheet, which basically shows us what? Our assets, our liabilities, and the equity. Then you have the cash flow statement. It basically shows us the inflow and the outflow. So these are the three statements we shall be covering in our course in detail. Number 4, interpreting financial results. We shall also do this in our course. So accounting helps in analyzing the financial outcome of business operation. Users can interpret results to understand profitability. So we shall cover, there is what is known as profitability ratio. Like, how can we know if our business is profitable? So there are some ratios that can really help us. So we can use, for example, we have the return on asset, we have the return on investment, the return on from sales. So all those, we shall learn about those, how we can interpret this financial statement. Then number 2, liquidity. So we have what is known as liquidity and we have what is known as solvency. So who can tell us what is the difference between liquidity and solvency? Who can tell us what is the difference? What is the difference between liquidity and solvency? What is the difference? Is there a difference or these two words are the same? Yes, please. Are these two words the same or they're different? So nobody can answer this question. So when you are talking about liquidity and solvency, they are two different things. And we shall also see, like, how do you measure in an organization? How do we measure the liquidity? So when you're talking about liquidity, it is the ability of an organization or a business to meet its short-term obligation. In an exam, you can be asked what is liquidity. So when you're talking about liquidity, you are basically saying that you are in a position to meet your short-term obligation. For example, you can pay your bills, the rent, you can pay the electricity, you can pay, for example, your workers on a daily basis. So that is the meaning of liquidity. Okay? And liquidity normally happens when your assets are more than your liabilities. If your assets are more, then mashallah, your liquidity is good. Then solvency is your ability to meet your long-term obligation. You take a loan. So if you can pay that loan, then your solvency, your company is in a good solvent state. Now, number 5, facilitating decision making. اتخاذ القرارات. Remember in the beginning we said that communicating. You can, managers, for example, when I gave the examples of managers, they always make decisions, but they cannot make decisions if they don't have any information. So the primary purpose of accounting is to provide relevant data. And this data aids means what? It helps in informed decision making. Many people sometimes, they normally make decisions, but they don't make decisions based on information. So they make decisions that are subjective, decisions that are not objective, decisions that are emotional. So if you're working in a company and you are a manager, you always need to ask the accountant to give you some data and information to make decisions. So management uses accounting information to formulate strategies. Remember when we were talking about business strategies? If you want to compete with your competitors, then you'll need some financial data to help you to control your operations, you need to know what are the costs, what are the revenues, and also lastly, to assess performance. Are we doing well or we are lagging behind? Number 6, ensuring compliance. Businesses must adhere to legal and regulatory requirements. Accounting provides the framework for compliance with various laws and standards, the general accepted accounting principle, for example. So these are, as we shall see in our coming lessons. So if, for example, you are an accountant, and if you want to be a good accountant, then you need to do the CPA course. It will really help. If you want to be a certified public accountant, you need to do the CPA course. So you need to comply. For example, the generally accepted principle. There are a lot of principles. For example, one of the principles is that when you are doing a business, you have to put a line between your business and your personal life. Those are two things. So that is one of the principles of the GAAP. Number 2, another principle of the GAAP, for every revenue, there is an expense. For every revenue, there is an expense. For every revenue, there is an expense. Another principle in accounting is that there is an accounting period. So you need to always ask yourself, when is your accounting period? إلى غير ذلك. Then measuring performance, as you've seen. So through accounting, businesses can evaluate their performance, تقييم الأداء. They can evaluate their performance over a period of time. Also, comparing financial results with previous periods or industry benchmark allows businesses to identify strengths and weaknesses. So also these financial statements can allow you to do, there is what is called trend analysis. So for example, we are in 2025. So you are having the financial records in 2024, from 2024, 2023, 2022, 2021. So you can easily compare your profit last year and this year. You can easily compare your liquidity ratio this year and last year. So that is the importance. So this will help us to know the strengths and weaknesses of our business. We can also compare our company, our profits with other businesses. For example, Somtel and Telesom. If we are in Somtel, we can use our financial statements to compare how good are we doing compared to our competitors. Number 8, monitoring cash flow. So accounting helps us to know our cash flow and cash in, cash out, cash in, cash out. It helps us to manage this. Then provide insight for future planning if you need to plan for the future. So historical financial data can be used for forecasting and budgeting. For example, if we are in 2025, if we are planning for 2026, then you are going to need the 2025 information that will help us to forecast our sales, to forecast our revenues, and at the same time to do what? To budget. So you cannot budget without having some information. Now, what are the importance of accounting? Stakeholder communication, we've already said that. So accounting helps us provide information to our investors. Remember, there are people who are investing in our company. They need to know how we are doing. Our employees, those people who we have employed, they also have a right to know what is happening inside, how we are doing. Our suppliers, our suppliers, they need to know how we are doing, because remember, sometimes they supply us and we pay them we don't pay them. We tell them we'll pay them later. So suppliers they don't want to take a risk they always want to know that you will be in a position to do what? To pay them. Risk management. So accounting helps in identifying financial risk through detailed tracking and assessment of financial activities. So accounting will help us to minimize our risk. So through accounting, we know, hey, our costs are going up. We need to minimize our costs. Our expenses are going up. There is a problem with our inventory. We need to do something. So it will really help us to do what? To minimize the risk. Facilitating investments. Investors rely on accounting information to assess potential investment opportunities. This is what I told you earlier. If I want to invest in your company, I'll have to review to analyze your financial statement. I cannot invest in you if I don't know your financial health. Number 4, enhancing operational efficiency. By monitoring income and expenses, businesses can identify areas for cost cutting and operational improvement. Remember, all businesses, they always focus on cutting costs. So the accounting statement, the financial statement, they will help you to know what are the areas that needs to be, what are the areas that we need to do what to cut the cost. Because if we cut the cost, then what is going to happen? The net effect is that we are going to get profits. But if the costs are more than the revenues, that is a red line, that is alarming, that is a red flag. Okay, in summary, accounting is not just about numbers. No, it is not just about number crunching. It is a vital function that aids in transparency, الشفافية, growth and numu, and strategic planning, تخطيط strategy. So these 3 things are very important. You need to be transparent with the people you're working with, because the more transparent you are, the people are going to gain confidence. Investors will gain confidence with you. The shareholders are going to gain confidence. Then it also helps in growth. If you want to expand, if you want to gain profits, accounting is very important. Then lastly, strategic planning. Now, importance of what? The next part. The next part is the importance and role of accounting in business and business strategy. Now, this part is related to what we did when we were covering this course, strategic management. Remember, in strategic management, we said that we normally have strategies. We have the corporate strategy up there. Then we normally have the business strategy in the middle. Then we have the operational strategies. So strategies are closely linked to accounting. If you want to have a good strategy, then you need to be very good in accounting. And the opposite is true. Now, that's a reminder of what we did in our course. So what is a strategy? So strategy can be defined as a plan of action. So a strategy refers to a comprehensive plan designed to achieve specific long-term goals and objectives. So strategy is just a plan of how we are going to achieve our goals and objectives as an organization. Number 2, strategy is also about resource allocation. Remember when we were talking in strategic management, we talked about the what? The RV what? The RVI. We talked about the importance of resources. We said that in an organization we have how many types of resources? We have the physical resources, we have the financial resources, we have the human resources, and we have the tangible resources. These are the 4 types of resources, and plus the financial resources. So it involves deciding how to best allocate limited resources, the time, money, and manpower to maximize effectiveness. Remember, as an organization, there is always nudra. We don't have enough. So because we don't have enough, we need to budget. And budgeting means we need to allocate to effectively and efficiently allocate the resources that we are having so that we can achieve our profit. Number 3, adaptability. A good strategy considered external factors and internal capabilities. This is what we did in strategic management. We said we have the external factors. Remember when you were talking about the pestle analysis? The external factors, the political factors, the economic factors, the social factors, the technological factors, environmental factors, ila ghairi dhalik. We need to analyze our external environment. Then the internal analysis, the SWOT analysis, we need to SWOT analyze ourselves as a company. We need to know, are our resources a source of competitive advantage? If the answer is yes, then we are good, we can compete with our competitors. So that is all about strategy. Now, when we are talking about business strategy, so business strategy is a set of decisions. It encompasses the choices regarding how a company intends to compete. How do you want to compete? Number 2, long-term direction. It outlines the long-term vision of our company. Then the most important thing, the competitive advantage. Remember, we are not competing alone. We are competing with many organizations. So we need to have a plan of how we are going to compete. Are we going to compete based on quality? Are we going to compete based on price? And that is, remember, in strategic management, we discuss about the Porter's strategy. Okay, now, what is the importance and role of accounting in business and business strategy? Now, how can we combine, because our course is about business accounting. Now, how does this accounting help us in our strategy? How? Are they related in any way? Yes. In fact, they're closely related. So number 1, financial decision making. So informed decision. Accounting provides essential financial data that helps management make informed decisions in various areas, such as investment, budgeting, and resource allocation. Again, analyzing profitability, financial statement allow business to do what? To assess which products or services are most profitable, guiding strategic focus. So the key word here is decision making, ittihad al-qararat. Remember, strategy is all about making decision. Strategy is all about making decision. So the accounting help us by providing the information that will help us make the decision. Number 2, budgeting and focusing. Accounting plays a vital role in preparing budgets that outline expected revenues and expenses over a specific period. If we already have a plan, which is our strategy, then we need to have a budget. We need to have budget. How are we going to allocate our resources to achieve our plan? Focusing at Tanabbo, focusing performance through historical data analysis. This is what I was telling you. We can analyze our historical data. In the previous years, how are we doing? Then from that, we can do what? We can compare and we can know our strength and we can know our weaknesses and areas that need improvement. Performance measurement. So accounting establishes key performance indicators that measure a company's success in achieving. So we can easily measure, accounting can easily help us as an organization to measure our performance in terms of profits, in terms of revenues, in terms of sales, in terms of assets, so we can easily know how good we are doing. Compliance and risk management. The government needs you to comply. Every year, the government will come to your company. Hey, we need to know if you are paying taxes. We need to know if you are using the accounting, the generally accepted accounting principle. Because some companies, they don't comply. Because remember, I said that you need to pay taxes based on the profit. So some organization, if they don't want to pay the taxes, they just cook the numbers. They show the government, hey, we are getting a loss. We cannot pay the taxes, which is not good at all. Resource allocation, accounting data guides how to allocate resources efficiently across different departments and projects. So remember, I already told you that as an organization, you have a lot of resources. But the question is, how are we going to allocate these resources? And the answer to that is in accounting. Accounting is going to help us know which departments are doing okay, which departments are haba and manthura. These departments are just there, but they are not helping us to get money. So we need to let go of those departments. And it can also help us to identify investment opportunities. Also, strategic planning and development. When it comes to long-term planning, accounting helps us a lot when it comes to drafting the vision of an organization. Number 7, enhancing stakeholder confidence. Remember, we have many stakeholders in our company or in our business. So if we want to gain their confidence, then our accounting has to be very good. Because if you want more people to invest in your company, then you have to be open. You need to give them the financial data. You need to show them that you are doing well as a company. Creditors, the banks, they are one of our key supporters, key partners. But if you are not doing well, what will happen? The banks will not give you loan. And if they don't give you these loans, how are you going to expand as a business? Your employees, your employees need to know if the business is doing well or not doing well. Because if you cannot pay your employees' salary, it means your business is bankrupt. They are going to leave you. They are going to go to another company. Long-term sustainability. Ongoing financial tracking ensures that the business is on a sustainable path, allowing for adjustment in strategy when necessary. So when we are talking about sustainability, sustainability is normally about endurance. That is, can we manage our business in the next 4, 5, 6, 7 years? Can we pay our rent in the next 4, 5 years? Can we pay employees their salaries in the next 4, 5 years? That is what is known as sustainability. So accounting helps us when it comes to doing what? When it comes to drafting plans that can help us move in the long term. Now, the next part of our lesson is about the key accounting terminologies. So from next week or from tomorrow, we shall be doing a lot of calculations, and so you need to be familiar with this accounting, because most of you or some of you don't have the accounting background. So it's very important actually to do what? It's very important to familiarize yourself with these terms. So number 1, we have what is known as asset. In Arabic, it is known as al-usul. So these are resources owned by a business that have economic value. Underline the word economic value. If it does not have any economic value, then it is not an asset. So it should have an economic value and can provide future benefits. هذا هو الشرط القيمة. So for example, cash, inventory, property, equipment, for example, computers, furniture, anything in your company or in your business that has value. And when you are talking about the assets, we have, of course, two types of assets, as we shall see later. So we have normally the fixed assets and assets that are current assets and fixed assets. Liabilities. When you're talking about liabilities, these are obligations or debts that a business owes to external parties. For example, creditors. Creditors can be bank. I take a loan from a bank, so the bank is my creditor. They are giving us bank. It means I'm going to pay them. Or sometimes not necessarily the bank, but sometimes you have friends. You have friends who can give you what? Who can give you loan. Then suppliers. Sometimes people supply us with things and we don't pay them. Maybe we pay them later, you know. So examples are loans, account payables, that is from our suppliers, the monies we need to pay our suppliers for goods that they have supplied us with. Mortgages, إلى غير ذلك. Mortgages are the loans we normally take to build houses. They are called mortgages. Equity, the residual interest in the assets of a business after deducting liabilities. So we normally get equity, it is assets minus liability. Assets minus liability. Equity. So when you're talking about equity, is your pie. For example, if you're having a pizza, like what is your pie? What is your share? So assets minus all wajibat, all what? All the obligations you're having. If you minus what remains is your equity. What remains is what you have gained. Revenue, al-iradat, these are income generated from normal business. So what normally comes in, for example, if you're having a shop, you sell, you get money. You sell. So when you're talking about iradat, money that is coming in, iradat. So sales revenue. Okay, when you are selling a product, then the service income. So we have 1 minute remaining. So we'll come back after the break. I'm going to send another link after 10 minutes. I will send another link after 10 minutes. This lesson is going to do what? You only have few seconds remaining. So I'll send another link. So the next